behalf of Crosscheck Media and Biz Talk Today TV, welcome everyone to Financial Compass with Mish Schneider. I am your host, Todd Schoenberger, and joining me as she does every week at this time is the chief strategist at MarketGauge.com and the founder of the Economic Modern Family channel on YouTube, Mish Schneider. Mish, welcome back to your show. So we have to talk about what's going on currently in the markets, which is a massive sell-off. We were doing well this morning. The president starts speaking, and it seems that traders are not quite agreeing, maybe, who knows, or hemming and hawing based off of what the president is saying. We see oil is obviously a lot higher right at this moment. What's the deal, though, Mish? I was kind of getting the impression over the past couple of days the war might be coming to an end, but what do you think?
It's so hard to really formulate an opinion or even have a clear thought because nobody, I think, really knows what's going on. But what is so amazing about Trump's statements is even he sounded surprised that the market wasn't down more and oil wasn't up more, which to me is an interesting kind of confession that things aren't quite as settled as other messages that we've heard. That puts traders in a very, very precarious spot right now.
Yeah, well, I have to say, I think a lot of it has to do with the fact that we don't have cameras at the Strait of Hormuz. We don't have warships right there. We don't have anybody that's escorting tankers in and out of that body of water. So it does lead to the optics where, okay, we drop bombs, we hit 10,000 targets, but until we actually start seeing real boots on the ground, once we see our Marines actually having to be on the land and in the country of Iran, I think that's going to change the entire narrative very quickly. But I have to ask, though, because Citibank came out just this week and said, because of all the geopolitical events and the war, and now the hurricane list came out and the potential 4 to 5 massive hurricanes really brewing up in the Gulf and also in the Atlantic, it could cause quite a disruption to oil. If that's the case, they actually have a $200 price target now on a barrel if all these uncertainties actually happen. What do you think, Mish? What would $200 actually do to the economy? But how do you take advantage of it if you're a trader?
Well, all these things that you said are certainly what's buzzing around and potentials. We don't know. But what we do know, what we have, what I count on more than anything right now is price. And so if we just look at the price of oil, we have hit $100 if we're looking at WTI several times. We've only gone through it once and quickly went back down below it. And we held exactly where we were talking about last week as support at around 88. So you have a range. So instead of getting nuts and trying to figure out if, then, what, if, blah, all that stuff, just watch the price. So if oil actually gets through $100 a barrel, I think that pretty much tells you that things are escalating, or perhaps we will have boots on the ground, or Iran is not necessarily backing down the way the president had hoped they would, although that's already happening. We just don't know the extent of anything. That's why the price will be the key here. So that's what I'm watching. I'm watching oil to get over $100. And if we are going to have these sort of storm disruptions that you're talking about, which I think we said last week also, El Nino is back in town, although I've heard La Nina, the sister, is even more vicious. But it's not a big surprise that we may have a lot of hurricanes. I can just tell you where I live, we've had 85-degree temperature in mid-March. That's unusual. So we already can see patterns of weather are different. I just spoke to a friend in Minnesota. It's 70 degrees in March, unusual. So let's say that happens. Also, I'm perplexed at how cheap natural gas is right now. And so I think you have to watch oil, and I think you have to watch natural gas. And then, of course, we know who the big winners have been, all the oil companies.
Oh, no doubt about it. ExxonMobil hit another 52-week high this week. It's around 164. You see it with Chevron, ConocoPhillips. They're all doing very well. they've done very well this year, even before the war, and now obviously they're hitting higher highs. Let's turn the page though on food. Now, one of your key areas that you love to talk about is when you start talking about DBA, you talk soybeans, corn. Can you give the audience a little bit more detail on the food trade right now? Because one thing that I think is very obviously it's going to happen is you're going to have higher inflation, hotter inflation in March, and obviously it could also carry into April. Food costs are going to go to the moon. Can you tell everyone how people can capitalize on this?
Absolutely. Well, first of all, we have been talking about DBA, and now as we're speaking, it traded over 27. So I know that doesn't sound very volatile because we talked about it going over 26. So it's taken all this time to get up to $1 higher. But if you look under the surface, yes, looking at soybeans, corn, and wheat, again, not volatile, but they've been moving higher. And of course, what's the most important impact of food and higher inflation costs as a result of food is what people reach for when there's social unrest. And you know, my favorite topic, sugar. And what's really been hot in the last, since we've talked now over the several weeks, is sugar. I think we said buy it over 14.20, buy it over 14.50, buy it over 15. Well, now it's getting close to 16 cents a pound. And what does that mean? That everything you just talked about with food prices going up, if sugar goes up, even though people say sugar's bad, poo sugar, let's not eat it. When times are rough, people turn to sugar because it's comfort food. In poorer nations, food with sugar is often cheaper. And it actually really does measure a level of social unrest. And to date, outside of the obvious areas where there are social unrest, obviously in the Middle East, we have not really heard about a lot of social unrest anywhere else. And so I would keep my eyes on that because so far in the United States, things have been relatively tame. People have accepted, just like Trump said, they've sort of accepted higher oil and higher food prices. They've accepted that maybe their 401s are not looking as pretty as they were a couple of months ago until they don't accept all of that. And that's why I like to watch sugar.
Let's on the sugar trade. Can you give the audience an idea? I mean, it's the sugar contract. Is this
Correct.
something you can just open up a Schwab account, Robinhood, whatever, and start buying one of these contracts? And is there a minimum? I mean, you can't just buy one contract for 16 cents, but can you give the audience a little bit more of an idea?
Yeah, well, sh sugar, right. There's, oh my goodness, I used to know this cold. How much sugar is in one contract? But I think
It's
you
about
can buy one contract of sugar. But the way to do it really for the layperson would be through cane, the ETF. Is it perfect? No, it's about as imperfect as buying USO for oil and buying Boyle for natural gas or buying, I don't know, DBA for the food representative instead of buying outright soybeans. But it works. If sugar's going up, cane is going up. So you might want to take a look at that. Last I looked this morning, cane was trading at around 1050. That too broke out over the 50-day moving average. So that would be probably, I think, for most people, the best way to play it, unless you really want to become either an options expert, and that's another way to trade futures, of course, is by out of the money calls potentially, or go right into the futures contract. I used to trade sugar. And so as long as you have stops and you think actively, then I think you would be okay.
So historically speaking, though, during uncertain times, um, economic recessions, just really downtrodden events that happen, you're suggesting historically speaking, sugar has performed well during those bad times.
Absolutely. If you just go back in time, let's go back to the 70s. So after we had the 73 oil embargo situation, in 76, a couple of years later, sugar went to all-time highs at 65 cents, which is huge. Can you imagine paying 65 cents a pound for sugar? And I mean, and that's in the, yeah, obviously in the raw market. And then it went back down. And then in 1979, 1980, when we started to see gold and silver spike higher, sugar rallied once again, only this time it got up to about 44, 45 cents a pound. We've not seen it that high since. The high we've had in this decade was right after COVID. It went to, I think, 28 cents a pound and then sold all the way off. So it does. It cycles with, and it always seems to be the follower, not the leader. It's the follower, but it also means that things aren't getting better. They're going from bad to worse potentially.
Interesting. Are there any other areas from the food perspective though that you would recommend? I mean, what about coffee? I mean, if people are staying up all night, I'd imagine they're drinking more coffee. Is there a rally trade there?
You know, it's so funny. You're the second person today who asked me about coffee. And quite honestly, I only think about coffee when we have like a freeze in Brazil. And actually, coffee right now, I didn't even look at the chart and I should have this morning. It's over the 50-day moving average if you're looking at the May contract in coffee, KCK 26. But it hasn't quite gotten through yet the 200. So right now we do look like a nice base, which looks to me like we could probably go maybe another $20 higher from here, which would put it right around just above the 200-day moving edge. It's not my favorite trade, but looking at the chart, it's not bad. One of the reasons why it's not my favorite trade is because there used to be an ETF that you could trade for it, and there isn't anymore. So
Huh.
so you have to go to the futures market. And once you have to go to the futures market, if you don't understand how to trade futures, then probably a little bit dangerous.
That's interesting. So there's an idea for any ETF entrepreneurs out there, maybe create a coffee ETF again.
There was one called JO. How perfect, right? Cup of Joe. But it
That
went
is
away.
funny.
And so I don't know what made it go bankrupt or whatever, but it stopped. And I haven't really traded coffee since because I don't have the time to trade the futures. I mean, I'm an old day trader of futures, and I still think that's probably have your core position, but still probably the best way to take advantage of this new commodities market is day trade.
Mitch, let's turn the page to the economic modern family, and I have to get your thoughts on the word of recession is now entering. You brought it up first on Financial Compass. You were
I'm
the
proud of
very yeah, you were really in financial media. You were really the first one to talk about it because this was pre-war. This was the narrative where everything is going great, blah blah blah, the whole thing. And now all of a sudden you have news stories out there talking about the percentage, the probability factor of a potential recession this year. Goldman Sachs came out and said we have a 30% chance. I know IBKR says 38%. What do you think, Mish? You were the first one to bring this up. Everything that you're seeing right now, especially from a trading perspective, are you anticipating that we might have some serious downtimes later on this year in the country?
Well, I certainly think it's possible. And let's even step back because people are saying stagflation now, but I've been seeing stagflation for quite some time because, I mean, really basically since the pandemic, because of the fact that our growth in the United States has been mainly through tech. Now, that's not to dismiss the relevancy of tech and tech growth, but we know that as tech grows, we have to see the trickle effect to other areas of the market and or the economy, which would mean, of course, the consumer, the labor market, the small caps or the manufacturing industrial side of the US economy, and transportation. And I never saw that. It was always growth leads, growth leads, growth leads. And it's healthy, but is it really showing major growth on all levels? You know, the kind of thing where we used to have back in the 90s when we had actually a surplus for a little bit. No, instead, we've had this huge deficit. We have our debt rising, and we have those sectors of the market probably the most vulnerable, although still hanging on. So that's why I'm saying stagflation people are kind of a little late to that party. And now what I'm seeing is from stagflation is that the speed bump to the next level, which usually follows stagflation, has certainly in all other periods of time, recession. And what would cause a recession, Todd? I mean, we certainly are looking at the labor market, right? So jobless claims weren't so bad. Big deal. That's really irrelevant to me. We're looking at the private credit market. More and more stories coming out about that. That could really hurt. That could just send things spiraling down. We're looking at the consumer. Okay, today, actually, the consumer member of my family, Granny Retail, is green while we're seeing other things red. But what does that mean? The bottom is in? I'm not going to say no, but I'm not necessarily sure because we're still below the 200-day moving average in the XRT. You know, IYT, transportation, have we really seen the impact of rising fuel costs and rising freight costs? Well, it seems like maybe that's a little bit slow, but if that starts to come in, that R word looks more likely. And certainly if you're just looking at right now flying, I mean, all I see is pictures of obscene lines. And I've even heard rumors that the airports could just shut down if they can't get people onto their planes and the TSA people are out. And then, you know, you get air traffic controllers also going out for whatever reason if they're not getting paid enough. You know, this is what cripples a country. So I hate to talk like this. I really do. When I hear it come out of my mouth, I want to like completely like smack my face and go, no, 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 put back on your rose-colored glasses. But it's really hard right now. I'm hoping that this week, if we can hold up and not crash further, that it means that Trump is right. People are a little bit more confident than what he would have guessed in what he's doing, and we will see some kind of quick resolution to this. We have hope, right? That's our greatest attribute as human beings.
Yeah. Well, it's interesting when you're speaking of the long lines at the airports. It's a story, but it only is relevant to somebody who has to go to the airport. And even there, it's not every airport. It really, like the smaller airports aren't having any issues. So, both the larger ones are, and they are going to continue to. But again, it's not impacting everybody coast to coast. So, it's another one of those stories that is there. Everybody knows about it, but until you have to actually experience it, you're not going to have to worry about it. But on the economic modern family, so are you suggesting Granny Retail is actually being is positive at this point on this day? I mean, give the audience an idea of what they can expect because one thing I love about the economic modern family is its ability to actually give me really an idea of what the next few days are going to be, or at least the next week or next 2 weeks. It gives me it's a proxy for how I should feel as a consumer.
Absolutely. And so if we look at IWM, right, the Russell 2000, which is the grandpa, it is definitely weaker. However, it hasn't broken down under the 50-week moving average. So technically on a weekly time frame, it's still bullish. Transportation hasn't broken down under the 50-week moving average. Technically, it's still bullish. Same thing with semiconductors and even the regional banks, which would be hit hard with any kind of a private credit debacle. So what they're telling us right now is they're hanging on to support. That's a positive. IBB, same thing, all right? That's biotech. That's also holding on well above its 50-week moving average, as is semiconductors, by the way. But let's look at Granny. So Granny, the canary in the coal mine, right, broke down under the 50-week moving average, and it's so far the only one, besides crypto, but it's the only one that has broken down under the 50-week moving average. And actually, crypto didn't even break down. The 50-week moving average in crypto was 58,000. It actually held it almost to the tick before it bounced. But getting back to Granny, if we could hold here between the November lows, by the way, which we tested this week, so let's call that around 76-ish. If we can hold 76, hold now 80, which is kind of pivotal, and start to work our way up till we get back over the 50-week moving average, which I think is about 83, with everything else still holding, then I would say, regardless, forget about headlines, we're getting a pass. Does that mean we're going to go to new all-time highs? Take one step at a time? I doubt it. But at least it would mean that people would have an opportunity to make back some of the money they may have lost over the last few weeks if they, of course, realize that this doesn't mean the market's going to just keep going up and up and up. And of course, we have to talk about the Fed and the bonds.
Well, let's talk about real quickly. We'll close out the show on the bonds. Can you, and we'll mix that in with the Fed. The Fed meeting last week was quite spicy with the press conference. We did talk last Thursday after the meeting, but what do you think on the bond side right now? I mean, how are people trading it?
Well, I'm happy to say that I felt like I was the lone wolf saying that at some point, well, first of all, the fact that the Fed did not do anything was actually more bullish and dovish than one would have suspected. But two, there are other people who are starting to believe, as I believe, and some really serious people too. So that makes me feel better that at the raising of the rates going into an inflationary situation, what they're saying is will not help this type of inflationary situation because this is based on geopolitics, right? So raising the rates on top of the tax that oil is already putting on people will only squeeze people more, and it'll kill whatever happiness we have in the economy right now, all the things we're talking about. So therefore, you can't pay off your debt at 39 trillion with higher interest rates successfully. We have a lot of other foreign countries. Actually, I was surprised to learn that still own a lot of US debt, which means nobody can pay off debt at these high interest rates. Number one. Number two is the Fed is not going to be able to raise rates and get the oil market back down. It's just not going to happen. Maybe it affects things that aren't really being impacted right now, gold and silver, but it's not going to affect food prices, really. It's just going to hurt more. So I think the err to the side of caution is either flat policy or at some point maybe even saying, you know what, we got to save the economy, we have to lower rates. But right now, they actually are in a pretty good situation because things haven't gotten out of control inflationary and things haven't gotten out of control recessionary. And we know one usually leads to the other.
Well, I'm not surprised. Like you said, the serious people are out there talking about this. And because you're an influencer, you're actually influencing opinions out there. Well, you are. I mean, your exposure is everywhere. You're on all of the financial channels. You have your own show on BTT, Mish. Things are just looking up for you. You are a superstar. You're the 60 Minutes of financial journalism right now. So awesome. And I can see why everybody's saying what you're saying now because they're just catching up. So that's great news. Mish, the economic modern family, you got 30 seconds here. Anything new with it?
Well, we took a pause, but watch for our animation coming out this week because it's based on regional banks and digital banks playing dominoes. That's my little tip. It's going to be fun.
Oh my goodness, what a teaser. I love that. For everyone out there, go to YouTube, key in economic modern family, click subscribe. You will not be disappointed. It's very educational and it's super, actually, from a financial literacy standpoint, and share it with all of your friends and family as well. Mish, this is great. We're going to meet again next Thursday at 12 noon. It's April 2nd. We're already going into April. We're going to give everyone a preview of what they can expect for the month. And we'll obviously talk about all of the commodities issues going on with the Iran war. Mish, this was great. I'm looking forward to next week. What about you?
Definitely. And by the way, April 1st, which is April Fool's Day, is also the pink full moon. So let's get ready to howl.
The pink fall moon. I love that. That's going to change everything on Wall Street. Absolutely. And you're going to see us next Thursday, April 2nd, 12 noon live, 12 noon Eastern time. You will not want to miss it. So on behalf of Mish Schneider, I am Todd Schoenberger. Thank you once again for joining us on Financial Compass with Mish Schneider. Coming up at 3 o'clock live on BTT, we have Joe Madden show. Madden on the line. She is going to break down everything you will want to know about the Sweet 16 matchups tonight. You will not want to miss what she has to say when it comes to that subject. So until then, take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.
We're the economic modern family. Watch the flow. Market vibes tell you where the trends might go. We're the economic fam, guiding the scene. From the streets to the screens to your trading machine. Tap in, stay tuned. Feel the beat line, cause the market tells a story through the family line.
There's more happening behind the headlines, and you deserve the full story. At Biz Talk Today TV, we break down investing, government moves, entertainment business, and even sports gambling, all in one place. Real conversations, smart insights, content that helps you think smarter and stay ahead. Thousands are tuning in. Don't miss what's next. Subscribe now to Biz Talk Today TV on YouTube and join the conversation shaping the future.